Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: heightened political tensions here at home cast a shadow over the country's economy. The banking industry's trust assets rise 6.2% in September. Bitcoin's rally stalls just shy of the $100,000 mark. And billionaire investor Warren Buffett celebrates Thanksgiving with new charitable donations. First, a look at the financial markets. Wall Street's main indices close higher, driven by Scott Bessent's nomination as U.S. Treasury Secretary, which helped push bond yields lower. Investment strategists believe that Bessent could implement measures to restrain government borrowing. Meanwhile, talks of a ceasefire deal between Israel and Lebanon helped pull oil prices down.
What we would expect going forward is a rise in business sentiment as a result of this election cycle. Specific to that is the potential for regulatory relief. Over the last 4 years, there's been about a cumulative 3% drag on GDP growth, the result of kind of the regulatory burden that's been added across the U.S. economy. We expect that to flip as we kind of think forward to the next 4 years, and that's causing an increase in business confidence, helping to kind of propel those small cap companies in the stock market today.
In Europe, Donald Trump's Treasury pick also boosted market sentiment. This comes despite expectations that Bessent could help Trump implement protectionist trade policies. However, Bessent is generally viewed as a supporter of equity markets. Over here in the Asia Pacific, markets open lower, failing to follow Wall Street's lead. Traders in the region are awaiting Singapore's October manufacturing output data, expected to show a 2.2% year-on-year increase. With these developments unfolding across regions, all eyes remain on how global markets will react to these political and economic moves. Now, on another front, heightened political tensions are putting the country's economic stability and reputation as an investment destination at risk. This follows Vice President Sara Duterte's shocking revelation that she ordered the assassination of President Bongbong Marcos if she herself is killed. Sujin Kim has the details.
Following the political fiasco over the weekend, the local stock market still closed at 68.50 on Monday, up by 1.03% from Friday's trading. According to RCBC chief economist Michael Ricafort, political noise is nothing new. He says it is a natural part of democracy. Ricafort emphasizes what's important is to ensure that economic reforms remain on track and institutions in the country remain intact. But for credit rating and investor services chief economist Noel Leico, political instability has a direct impact on investments. He warns VP Sara's recent statements will not be well received by investors. Leico adds investment prospects for next year could also be affected if this issue is not resolved. John Paulo Rivera of the Philippine Institute for Development Studies also agrees political drama is hurting the country's image as an investment destination. As for economist and national scientist Raul Fabella, he says there is no question that investor perception of the country will change. He adds the fate of VP Sara now lies in the hands of the military. Sujin Kim, BNC.
Former central bank deputy governor Diwa Gunigundo warns that intensified political tensions could lead to economic instability. Gunigundo cautions that financial markets could face further disruptions. The peso could weaken even more and inflationary pressures could escalate. He notes that the country's fiscal space is already constrained and that debt concerns remain a genuine issue. Gunigundo also says that the political unrest could reinforce the outside world's perception of the Philippines as weak. He warns that such instability risks the country being viewed as a banana state, which does not inspire confidence or attract investments. Now, the banking industry's trust assets are up by 6.2% as of end September compared to the same period last year. The Bangko Sentral ng Pilipinas reports that trust holdings, which include fiduciary and investment management activities, remain highly liquid, with agency accounts making up the bulk of accountabilities. The country's 44 largest banks dominate the sector, holding a total of 4.29 trillion pesos in trust assets. This indicates that the Philippine banking sector continues to demonstrate strength and even liquidity amid economic uncertainties, and it reflects strong investor confidence in the industry's reliability in managing client assets effectively. Now, on another front, the world's largest cryptocurrency starting to lose its luster. Bitcoin dipped slightly to around $94,000 on Monday after coming close to the historic $100,000 mark last week. Now, traders are now questioning whether the surge, driven by President-elect Donald Trump's pro-cryptocurrency stance, may have been overhyped. Since Trump's election victory on November 5th, the overall value of the digital asset market has skyrocketed by about $1 trillion. All eyes are on Bitcoin this week to see if it can regain its upward trajectory or if the market will take a breather amid concerns of overvaluation and speculation. Now we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
From Manila to the globe, this is World News Feed, bringing you the biggest stories shaping our time. I'm Rain Musni. Let's dive into the headlines making a global impact. In the world of business, expansion is inevitable.
So I was a serial dater.
Not just a serial entrepreneur.
Yes.
You need fresh perspectives.
Different perspectives, different capabilities.
The sense of fulfillment, the sense of accomplishment. It's like you gave birth.
The relationships we have, how we treat our people. For me, that is the essence.
I'm Ces Orena Drilon at ito ang Usapang Bilyonaryo.
Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. As of 9:39 this morning, the PSE index is trading sideways with a slight downward bias, down by 0.1% to 6840. This after it gained 1% yesterday to 6850, despite all the political noise stemming from the highest offices in the land. Now, yesterday's gains came after 2 straight sessions of selling. So again, yesterday the PSE gained 1% to 6850. Right now we're down. We're trading sideways with a slight downward bias, down by 0.1% to 6840. The broader all shares index is flat right now at 3811. I'm looking at the sub-indices right now. So far, it's just the financials and the property counters that are bucking that downtrend. Now, at the foreign exchange market, the peso opened unchanged against the dollar at 58.98 compared to its previous close of 58.99. Now, to help us make sense of these numbers, we're joined by COL Financials equity analyst Adrien Yu. Adrien, welcome to the show.
Good morning, Maiki. Thanks for having me.
Good to have you. Adrien, this interview comes on the heels of the latest MSCI quarterly review, the last one for the year. Now, this is important because MSCI indexes are used by institutional investors and fund managers worldwide to benchmark their portfolios. Now, this time around, the changes, the rebalancing wasn't as aggressive as the previous ones. Not much movement either way, just a small country down weight. What does this tell you?
Well, I think the markets were waiting for the MSCI rebalancing to finish. They were unsure of how this will play out. I think now that it's past us, we didn't see a significant down weight. So I think the investors can now finally start to decide on how they want to position their portfolios as we enter the last quarter of the year. So they're basically trying to figure out is the sell-off temporary in nature, or is there some more prolonged selling that's following the MSCI?
Now, with that out of the picture, we also have a clearer view of the third quarter earnings. So with the rebalancing out of the way and the fuller picture of third quarter earnings, what are investors focusing on right now?
Well, the third quarter earnings on the headline doesn't look that great. We saw much more misses than hits for the third quarter. But overall, the picture isn't as bleak as the headline numbers show us. What we've seen with the banking and property sectors, they were quite resilient, but we saw some weaknesses in the consumer, and particularly in retailers. So on that front, I think we should see how it will look to recover in the fourth quarter. And I think investors should do well by positioning themselves in the better sectors.
How would you assess investor sentiment right now in the stock market, especially given, given that inflation is a concern, given that interest rates would likely head lower, and given the political noise? How would you assess investor sentiment at this junction?
Well, I think the investor sentiment, especially coming from the highs of 7,600 and then pulling back to 6,500, I think investor sentiment isn't that great at this point. But what we're seeing is that we saw a bounce from 6,500 and then test 7,000, and we're trying to find a footing at the 6,700 level. So I think at this point, the valuations are there. Companies are cheap enough that despite the political noise and some weak earnings, the valuations are there, and we're seeing strong bottom-picking activities, especially on the large blue-chip names.
Okay, now the U.S., the Monetary Board, both in the Philippines and in the United States, are going to be meeting mid-December to, of course, decide on interest rates. What are your expectations for rate actions?
I think for the U.S., I think the bets are in that there's a consensus that I think 60% are expecting another 25 basis points rate cut. I think that makes sense considering that they want to stimulate the economy, considering that the jobs numbers that are coming in are still okay, but I think there's some weaknesses that are coming in. So I think it makes sense for them to do another 25 basis points cut. When it comes to the Philippines, while there are some concerns that there are some inflationary pressures, I think the third quarter GDP number that wasn't that spectacular would likely increase the odds that the BSP will still cut another 25 basis points despite some worries on inflationary pressures.
Yeah, despite some worries on inflationary pressures and despite worries on the peso. The peso revisited a two-year low of 59 to the dollar level. You think even despite the weakness in the peso, because rate cuts are peso negative, you think the BSP will still push forward with a 25% reduction in interest rates?
But I think the weakness of the peso is not a peso problem, but more of the strength of the dollar. Yeah. So I think when the BSP's mandate isn't really, I guess, to defend against the dollar, although that's a secondary response when we do cut rates. But I think the BSP's mandate at this point is to stimulate growth. The GDP numbers, I think, should I guess it's not a matter of if, but when. So I think the BSP will still cut rates. One thing we have going for us is normally the fourth quarter is a seasonally strong period for the peso. Remittances normally come in first week of December, latest second week of December. So that should provide some cushion for the peso. So hopefully, despite, should the BSP cut by another 25 basis points, hopefully the peso can defend below the 60 peso level.
All right. For equity investors, how important is the peso stability to overall market sentiment for foreigners and for locals?
Well, what we've observed is that the peso is normally a leading indicator of the stock market. When we see the peso devalue or depreciate against the dollar, normally an equity sell-off happens. Now, normally this happens, so from a foreigner's perspective, normally they would hold their positions, they quote it in dollars, so they would have carry trade losses for equity exposures in emerging markets such as the Philippines. So I guess that's creating the pressure for foreigners to liquidate their positions and move it back into the dollar. Another thing that normally we notice is that I guess the peso, considering it's more liquid, is normally a leading indicator of all the things, not just equity related, and equities normally just follow. So that's one thing we have to worry about. Should the peso continue to weaken, we could see some more weakness in the equity markets, but should it find the footing somewhere here in this level, then we should see an equity rebound.
Now, despite the challenges facing both the peso and the stock market, where are the opportunities for investors?
I think that right now, investors would do well by basically trying to ignore the noise and trying to look at company-specific earnings. So what we've seen is that for the longest time, the market has been viewing banks as quite overbought or overvalued, but they're still resilient. And when you see the earnings come in, you tend to see why. And in addition to these sectors, investors would also do well by prioritizing those that pay strong dividends. Essentially, you're being paid to wait. So we have these strong companies that traditionally did not pay yields that were this high, but actually the earnings were quite good. The reason why the yields are increasing are is simply because the share price are dropping. So I think investors would do well by trying to pick their spots, looking at blue chip names that traditionally did not pay as high of a yield, and pick their spots in these names.
What names in particular?
Well, as I said earlier, I like banks. Banks for the remainder of the year and maybe up to early next year.
Which among them, Adrien?
I think considering the sell-off, I think investors will do better by buying the larger cap names, BDO, PPI, Metrobank. Even if the valuations might suggest the upside is not as high as compared to the smaller cap banks, I think their non-performing loans ratios being so low and their return on equity being so high, it makes sense to pay quite the premium on these big bank names. In addition to these names, I think investors would also do well by checking those that pay a higher dividend yield, such as, let's say, PLDT, that traditionally maybe paid 4 or 5%. I think now it's at 7, 8. So that's an interesting name to look at. Certain consumer names, as I said earlier, all the consumer names, everybody thinks that they didn't perform well, but actually that's not the case. We've seen Jollibee post strong third quarter earnings, so maybe they can look there. Yeah.
Okay, now on another front, the political noise stemming from Vice President Sara Duterte's assassination threat on the president and the First Lady should anything untoward happen to her. What sort of sway has this had, or what sort of sway do you see this having on the stock market and on the peso? How is it going to affect us economically, and how is it going to affect us reputationally?
Well, I think reputationally is quite, the impact will be more drastic considering that it's happening at the highest level. But in terms of on the economic front, or let's say more specifically for the equity markets, I think the impact, we won't see it immediately in terms of earnings. We will see it quite drastically in terms of on the valuations front. Foreigners will probably sell off local stocks without consideration for what names they're selling. They will probably put a country risk premium, a higher country risk premium on the Philippines. So we will see a valuations downgrade. So maybe another 10-20% downgrade on the valuations front across the board is something on the table should this continue to escalate. But in terms of earnings, we have to see how this will impact, I guess, political changes they want to make or economic reforms they want to make. So that's something that we have to wait on.
Yeah, in any case, it's distracting us from what we should be focusing on, which are really the fundamentals. Okay, Adrien, thank you for your time this morning.
Thank you, Maiki. Thanks for having me.
All right, that was Adrien Yu, equity analyst at COL Financial. Now, in other news, Apple CEO Tim Cook reaffirms the company's commitment to the Chinese market despite intense competition from Huawei. Cook made those remarks at Apple's second China International Supply Chain Expo, marking his third business trip to China this year.
I'm thrilled to be here, and I'm so proud that Apple has an exhibit here with our partners. Oh, I value them very highly. We could not do what we do without them. I think it's a great expo, a tour de force of innovation. This is my third trip this year, and it was so wonderful to be there to see the intersection of technology and agriculture, and it feels wonderful to be a part of it. China, we're very committed to China. That's the reason I've been here 3 times.
Apple has invested over $20 billion in intelligent and green manufacturing in China over the past 5 years. Of its approximately 200 major global suppliers, more than 80% have manufacturing facilities located in China. For global investors, Apple's strong presence in China highlights the country's critical role in the tech supply chain. This reaffirms China as a key investment destination for tech companies, despite geopolitical and competitive pressures. Now, philanthropist and investor Warren Buffett continues his Thanksgiving tradition of giving by announcing plans to donate over $1.1 billion in Berkshire Hathaway stock to 4 of his family foundations. Buffett also revealed new details about his plans for distributing the rest of his fortune after his death. The 94-year-old billionaire previously stated that his 3 children will oversee the distribution of his remaining $147.4 billion within 10 years of his passing. Now, he has designated successors for each of his children, Howard, Peter, and Susie, who are 71, 69, and 66 respectively, to ensure his charitable mission continues, even if they are unable to complete it themselves. Buffett's latest announcements reaffirm his long-standing commitment to philanthropy and leave a well-planned legacy for the future generations to carry forward. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.